But let's get back to our personal finance corner. Hemant Rustagi of Wiseinvest Advisors joins us, and let's go across to our first caller who's standing by. K. Rajan calls us from Bangalore. Hello.
Hello.
Hi, Mr. Rajan.
Hi, how are you? Good afternoon.
Very good, Mr. Rajan. A very good afternoon. What's your query?
I'd like to know if it's advisable to invest in U.S. equity funds.
All right, I'll put that query across then to our expert.
Well, one of the ways to reduce risk in investor portfolio is through diversification. And this can be achieved by, following a strategy of asset allocation, which is to invest in different asset classes like debt, equity, and gold. It is equally important to ensure that one has a well-diversified portfolio within an asset class. Now, for example, someone who has a portfolio in equity, he must ensure that he diversifies his portfolio across different sectors and also across different market caps like large cap, mid cap, and small cap. But one important aspect of diversification, which is often overlooked by investors, is geographical diversification, that is, investing across different regions and different countries. Fortunately for Indian investors, there are many opportunities to invest in international markets. That can be done through mutual fund products. Most of these funds are actually essentially a fund of fund. If one were to analyze the performance of these funds over the last couple of years, the performance of funds investing in U.S. equity actually stands out. Now, for example, there are funds like ICICI Pru's U.S. Blue Chip Equity Fund and also Motilal Oswal's NASDAQ 100 ETF. Now, these funds have delivered a return of 45% and 46% respectively over the last 1 year. And the reason why these funds have done well is because there has been recovery in U.S. economy, and there has been a resultant rally in the U.S. market as well as currency. Considering that the recovery in the U.S. economy is likely to continue, and the fact that these funds can actually be a hedge against currency fluctuation, there is certainly a case for investing in U.S. funds. But I think even though there is a fear of, I would say, that quantitative easing rollback, but I think one can expect that U.S. corporate earning growth will offset its impact on the performance. But my view also is that only those investors who are experienced and have a reasonably large size of portfolio should be investing in these funds. Of course, it's also important to invest with a moderate expectation. Ideally, one can invest around 10% of one's portfolio in international funds.
Okay, that's useful advice, Hemant, especially because now perhaps after burning one's fingers in the domestic market, retailers are looking for opportunities outside, or at least for some diversification. Okay, we've got another query for you. Mallika Arya, we are not able to get her on phone now, but she has sent us an SMS query. She's written to us from New Delhi. Mallika wants to know the recent RBI directives and how they affect investments into gold. I guess she's not only referring to RBI but also to the taxes on gold. What bearing does it have if she wants to take a loan against her? Okay, it is then the Reserve Bank's rules that she's referring to, loan to value and such other rules. What bearing will it have if she takes a loan against her assets in gold?
Well, the Reserve Bank of India has actually barred banks from disbursing loan against gold coins weighing more than 50 grams, basically to restrict borrowing from banks to ensure that not too much speculative money goes into buying of gold. But there is no restriction on banks giving loan against the jewelry, which the banks can do according to the decision made by their board. So yes, in a way, it restricts one's ability to raise money against that. But like I said, one can go ahead and take loan against the jewelry, and also there is no restriction on buying gold. But my view is that if somebody is looking to buy gold for investment, then I think it makes sense to actually go for paper gold like gold ETF and gold savings fund. But I think it's also important to understand that currently one cannot even raise loan against even these two options.
Okay. That's useful advice, Hemant. I guess there are a lot of people out there with queries on that note. Thank you very much for joining us with those replies to our viewers on personal finance issues. Just a word on the market, still holding on to most of the gains. They are off the day's high, but...
MCX Stock Exchange, India's new stock exchange, presents Markets and Macros.